Hello guys, for this video I have 10 recommendations for beginners in investing in the stock market. Okay, so we'll begin with the first one. So the first one is set a goal and get some education. Okay, so the first thing you should do in order to invest in the stock market is to get some education. Now, why education is so important? Okay, it just gives you the general picture of the whole investing process. It means you should know what you are going to do and what is your investment plan. There are a lot of things that you can include in this plan for investing. Okay, so the main thing, when you get some education, it clarifies a lot of points for you. So without this education, what you should do, you begin, for example, going to online like videos, guys who ask you to buy that stock or to buy this company because of the fundamentals, or because of this guru has said something, or because someone has said this, or an analyst said that this company is will be the best company in the world. Okay, if you rely on all these, believe me, you will fail in the future. Why? Because you don't know why they say to you, buy this stock. And understand, I'm telling you always that the market is not as easy as you might think. Almost all the people advertise, and in order to get the information from the advertisement, you will see hundreds of companies, always people they advertise for. Do this, buy this, buy this, buy this, and you will be always confused. So by getting some education, you will choose by yourself. You select companies by yourself. You don't have to have hundreds of companies and you have small account. Okay, begin with the things that you understand. Okay, if you understand, for example, banking system, if you understand the drugs companies, if you understand transportation, whatever thing you understand, you can make, and you can have some information, and then you make a plan. This plan is for 5 years, 10 years, okay, or the whole life. It means you just decide. Okay, you say, I have no investment, I am just paycheck to paycheck, or I am a salary, I am a manager, for example, or I own a small business, and then you see yourself that you don't have any investment. Okay, so this is a real problem, because all the future depends on your investment. For example, when you retire, or when you need money, this is the problem. You don't find, because you don't think about investing. Investing should be to have money in the future. So for now, since you don't have no investment, so if you stop your job, or you get fired, or you have a problem, you find yourself in real trouble. Okay, so let's go to the second recommendation is save more money. So let's clarify this. Let's clarify this idea. Save money, it doesn't mean that you have small job and you will take $500 and you put it aside. No, I'm not speaking about that, because I know you can't. But try just to have a minimum investment money each paycheck or each salary. You put it aside, it's automatic. Okay, you take it, you throw it into your broker account. Now this money you forget about. Even if you have little money, you can invest. Always you can invest. Okay, so this is a major thing. Now this should be automatic saving money, automatic, and it should be in each paycheck or each salary. If you are salary each month, it should be, you should be consistent saving money. Even if you save $20 or $50 or $100, whatever money is, you should begin from the beginning. I understand you don't have money, but there are millions of Americans here, they don't have money. They are in the same situation. But the real thing, some people who save, I'm just giving you an example. Just an example, okay? You want to have a trip, for example, or to travel. Let's say you save $100 from summer to the next summer. You will have how much? You will have $1,200. Now, $1,200, if you have a car, you can go anywhere and you can spend the weekend or spend 1 week or two in whatever place according to your money. So this money that you saved has given you the possibility to travel and to have trips. But if you spend all your money, the summer is coming and you don't have any money, so what can you do in order to travel? So this is just an example of traveling. But for investment, you are building wealth. Okay, so let's see the third one. Okay, invest right away or use my 2 criteria training level 2. So this is just an idea which is, when you have each paycheck or each salary, you can have it for 1 month or 2 or 3, and you have all this money, since it is in your account, in your broker account or Roth IRA, as I will speak about it later. It's in your account. Now understand that broker account is like a bank. Okay, if you don't invest your money, it is like a bank. They even give you, I think, interest rates 1% or 2%, depending on the brokers. Okay, even if you don't buy stocks. So try to have just $200 or $300 or $500, and then buy once. Let's say each 2 months or 3 months you buy some shares of a company. Then 2 months or 3 months you buy some shares of a company, like this. It means right away. Now there is another way to invest, is you can use my 2 criteria. Let's say you have found, for example, 10 companies that you like too much and you want to invest in these companies, either in retail or banks or drugs, whatever company is. You like these companies, and you do your homework and you see that these companies are doing very, very well and they are making more money, the earnings is good, they give dividend. It's a lot of stuff that you should check. Now my 2 criteria tells you the first day to buy. So you put a list, you put my criteria, 2 criteria only, on the stocks, and then whenever a stock gets the signal, you just go and buy that stock. Okay, so but first you should put your money into your broker and just wait for opportunity to buy. Okay, so this is just about momentum, when to buy. You can use it or you don't use it. It's your it's not so important. But avoid, I'm telling you just my opinion, avoid buying stocks that go down for a long time. Okay, sometimes these companies are losing business, and if you follow and you put more money and the stock is going down and going down, okay, you will have trouble. So avoid this kind of stocks. Okay, so let's say you see number 4, wealth begins small. So to understand this information, no one has just invested today and tomorrow he is wealthy or he is rich. Okay? Warren Buffett, for example, he is one of the most known investor. It took him 10 years, 20 years, 50 years, 60 years. It means all his life. It is all his life he's investing. Okay? It doesn't mean that he is in the first month or 2 months or 6 or 1 year, you become a millionaire. And this, if you have money, a lot of money, yes. But since here I'm speaking about the majority of the people who have just jobs or they are managers, salary managers. I'm not even speaking about people who have money, like for example lawyers, doctors, or small businesses. They have money, and if they don't invest from the beginning, they lose a lot of things. Okay, so this is so important, that understand that you are building wealth from the day you start to invest. You just make a plan, and then you begin making the plan for many years, and you will see. I am very happy that you will be happy also to see your account growing year after year. Those who, for example, invest in 401k or other plans, they see also their accounts growing, but understand that 401k, although it is good and the company gives you money, which is very good, but understand that mutual funds, they don't let you be free to choose whenever stocks you want. So if you have that, it's okay. But I'm not speaking about these investment plans, because those are very slow, very slow vehicles. You can have them, but they are very slow. The good thing is that the company gives some money, like 100% or 50%, the money that you put. This is the best thing in 401k, but they are slow, and there are fees. Mutual funds, they take fees from your account. So that's why when you buy stocks, no one will take fees from you, but they give you dividend, which is you are not going to sell any shares. Okay, so you are building your wealth from the beginning. You have, for example, let's say the first year you have $1,000, $2,000. The second year you have $4,000, $5,000, $6,000, 10, 15, 20. So the more you stay investing, the more you put, the more you buy stocks, the more your account will be going up and up. And you invest in bad year, you invest in good year. So your investment plan should continue. It should never stop, because this is a plan you do for the whole life, except when there is an emergency or there is something. It is something else. Okay. So number 4. So number 5. Number 5, think of Roth IRA or 2 brokers account. So let's explain this, because I got a lot of questions about this. First, what is this Roth IRA? Roth IRA is just an account, okay? It's like a broker account. It's the same as your other broker account, but it is a special. Now, what is the good special is that you don't pay tax, which is excellent. It's better than to get an individual account, which is all the people, and all the people have individual account. But understand, when you make profits each year, this information of your broker should be sent to IRS, and you should report this profits if you have profits, and these profits you get taxed on as an income. Okay? Now, if you make, for example, an IRA, a Roth IRA, what does it mean? It means you don't pay tax. And understand, that it is a lot of money. Now, why you see, for example, you say the government or the IRS, or they have made this, you know, they have made this account just to help the majority of Americans. Okay, it's a relief. It means you get no stress, because whatever you have in your account, whatever profits you have during the years, it is yours. The only thing is, for this Roth IRA, I just tell you this information, but I have made other videos. You can check them, and you can ask your tax preparer or the CPA. Okay, it means the person who does your tax. At least he will give you more information and detailed information. The thing I know is that you can take your principal at any time. For example, the limit that you should put is $5,500 each year. Now, if you are over 50, you can put $6,500. Now, these numbers can change. You can put 1,000, you can put 500, you can put 200. It's what you want to do. But let's say after 5 years, 6 years, 7 years, you want to take what you put. You are allowed to take what you put without any penalty, without any tax. Okay? But the profits, they stay until you are 59 years and 6 months. So this you should understand. Now, let's go to the other thing. Why I told you you should make 2 accounts. 2 accounts is for the people who don't want to do a Roth IRA, okay? Because maybe they have 30,000, 60,000, or 100,000, or they have money, they invest, or they have saved a lot of money, and they want to begin investing, but this Roth IRA, each year is only 5,500, so it's little. So they don't want that. So you can make 2 accounts. Now, why, you ask, why we have 2 broker accounts? Why not 1? Because if you want to invest only, you can have only 1 account. You invest only in 1 account. If you want to trade like we do, for example, swing trading, or you do day trading, or if you want to do swing trading, day trading, try to make it another account. Now, why is that? It's just because of tax. You don't mix these 2 because it will be very hard. It will be very hard to see which stocks you have sold, which stocks you have not sold, and it will become a problem for your tax preparer. Okay, it will be a problem, and maybe he will ask you more money to do your tax, and it will be not good. So, from the beginning, understand. That's why I told you before, you should have some education before you invest or you trade, because it has some tax implications. Okay? Now, let's say if you want only one broker, you have, for example, 50,000 or 100,000 or 10,000, whatever money you have, and you want to do a broker account. So if you are doing only investing, what does it mean? It means you should keep the stock for more than 1 year. Now, if after 1 year, like 13 months or 16 months or 2 years, let's say you want to sell the stock that you have, that you own, and you take everything, so this, you will only pay 16% of your profits, because it is an investment for the long run, if it goes more than 1 year. Now, if you are day trader or swing traders like us, this you should make another account, because all what you get as profits will be like an income. It means it is added to your income, and you will be taxed on your tax bracket. So if you don't understand too much this thing, please ask questions your tax preparer or your CPA. He will give you more information to understand, because the best thing you can do in investing is to understand before you do. At least you will see the whole picture. Now, Number six. Number six, invest for the long run. Now, what does it mean invest for the long run? Since you are going not to sell, this is what we call investing for the long run. Especially more than 1 year. But if you bought stocks during the year, okay, after 1 year, 2 years, 3 years, they are doing good. It means whatever percentage, you should just accept the percentage. A stock gives you 50%, a stock gives you 10%, another stock goes down 5% or 10%. This is investing. It means you will never know which stock will be better than the other one. You see a stock, you say, no, this stock has bad reputation, or analysts are against it, but later this stock will do better than the best stock in the market. So let this for the future. Understand, I'm telling you always, no one knows the future. Yes, some people knows about the companies. They say this is a good company, this is a bad company, according to what it does. But in the future, no one knows the future. Even Warren Buffett had said that I don't understand internet stocks and some retail stocks like Amazon. He said that if I know that Amazon would be $1,500, I would buy it like 10 or 20 or 30 years when it is an IPO. So he doesn't know, he doesn't understand how this company, which is very small, can become big. He doesn't understand what is it, the structure of this business. So that's why I told you, even Warren Buffett doesn't know, no one knows. So don't try to stress yourself and you think that you should have some stocks and all they go up. There are some stocks that they go down, this is for sure. Now, after 1 year, 2 years, 3 years, you see your investment. If this stock is not doing good, this company investment, you think that it is not doing good or it's going down, you can sell it after a few years, after you see that this stock is not good for you, your investment. But if this company, there are some companies, they go each year, so they are doing very good, so you should just continue investing, and that's it. Now we go to number 6, invest in dividend stocks. Now, you have the choice to do some kind of investment. Either you should see this dividend stock, which we call value stock. Now, that give dividend. Now, why you should do that? These companies that they give dividend, they are stable. It means they have been 10 years, 20 years in the market. They are stable. They give a dividend, okay? And they are stable in the market, and you can see the history, and this company is doing good. So, getting dividend is good. Why? It's just because you are not going to sell shares. Your goal is to add more shares, to buy more, to make your account bigger and bigger and bigger. This is your goal. It's not your goal 1 year or two and then you sell everything and then you take your money. So this is, if it is your goal just to invest for 2 years or 3 years or 5 years, this is another thing I respect. But if you want to make a bigger account, understand that dividend is something that comes to you as cash payment. It means it is taken from the stock. Yes, a stock, for example, it is $100. It pays 5% yield each year. So when they cut this $5, it becomes 95. So it is just your money from the stock. But the good thing about dividend, what is it? It is you don't sell. You have the same shares. Okay? This is the good thing. Now, let's go to the other thing. Growth stocks. Growth stocks are stocks that move fast according to the industry on the market. it goes faster than the market. For example, let's take an example, but it's not just you go and you buy, because it depends on what the stock is. Let's say I give you an example. Facebook was 1755 nearly 6 years ago in 2012, but now it is, let's say, 170. Okay, so this stock, if you see the S&P 500, you will see that Facebook is better, way better than the market, or Dow Jones is way better. Okay, so that's why some people, they like to buy growth stocks. Now it depends what is your goal. If your goal not to sell any shares, because when you have these growth stocks, the only thing you can take money from the stock is you sell shares. Okay, let's say you buy a stock at 100, now it is 200. Okay, you make 100% in 1 year or 2 years or 3 years or 4 years. Now if you want to take money, it will be selling shares, and some people, they don't like to sell shares. They want to leave their account as it is, growing each year, growing. They want to add more, not the opposite, not to sell shares. Okay, let's go to 8. So let's go to number 8. So number 8 is invest in ETF, which is exchange traded funds, if newbie. Now let's see here. Some people, they don't understand which stocks is going up, which is stock. They don't know investing, and they don't want to go and search, and it means some people get stressed when they want to get education. Yes, this is too bad. I understand. It's too bad, because you are going to invest for the whole life, and you don't want to take education, or you don't want to educate yourself about what you are going to do. And this is something bad for those who don't. But if you want an easy thing, you can check ETFs. ETFs, it is just a stock that tracks an index, whatever index you like. You have hundreds and hundreds of ETFs. For example, let's say you like oil and gas industry. You find the ETF and just you buy it. If this industry is going up in the future, 1 year, 2 years, 3 years, 4 years, and you think that this industry will be going up, okay, you will be making money. That's it. Some ETFs, they give dividend also. So check if this stock give dividend or not. It's very easy to check. You just put the ETF name and search Yahoo, and it will give you all the information. It give you the dividend yield. If it doesn't give you, it means, if there is no, it means that this doesn't give what we call dividend. So it is all up to you. Understand that this stock, they have a fee which is less than $1, which is less than 1%. It could be 0.50% or 0.3. So you should see this information before you invest. And you know, if you are investing each 2 months, 3 months, you have money, you just buy. You find 5 or 6 or 7 ETFs, and then you buy. But understand that in terms of growth of stocks are doing better because you don't pay any fee. Now, when you go to ETF, yes, it is easy, but you are paying something, and this thing that you pay you should pay until whatever year you stay, 10 years, 15 years, 20 years. It's always the same, and you should pay it, and the ETF fund will take this money from the fund. That's why the price will go down a little bit. Now stocks is that stocks, you don't have to pay anything. Okay, so let's go to 9. So 9 is never late to begin. So what does it mean? What does it mean this for you? Never late, because some people who are 30 or 40 or 50 think that it is over. The stock market, they should invest when they are 20 years or 25 and they spend all their money, and no one teach them, their parents or the school doesn't teach anything about investing. It means this is why the people they get broke and they continue to be poor, because they have no way to know the information that makes the money. Okay, if you are 20 years and you have 401k, when you are 50 or 60, you will have $300,000 or $400,000 or $500,000. Depends on how much you put. You will have some money. But the same guy having the same job, he has no 401k and he doesn't care. And then one day they fire him, or even if he is manager or he is executive or whatever he is, it is his job, and he has a problem. Whenever he see there is no money, and when you have no money in America, like a capitalist country, you will have problems. Okay, so that's why you should just, whenever you understand that there is a need to invest or to trade, there is a need. If you are, for example, if you have another way to do it, like real estate, or you have other things to investment, yes, it's good. It's good because you know one way to invest in the whole market, not just stock market, but you can invest in anything. Okay, real estate or whatever. But still, even if you have a business, even if you are making money, and you see that you are good and you don't need money and you have some savings, but still, investing for 10 years, 20 years, 30 years is a priority. There are a lot of people who have, like, especially when they are middle class, they are having 200 or 300,000 a year or 400,000, depending on their jobs. They become millionaire very quick. But some of them, what they do, they buy too much. Okay, they buy a house that it is 1 million or 1.5 million. They buy the best car. They live in the best place. But all their money they spend. If they lose their job or there is a problem, everything will collapse. Okay, because see, for example, the funny thing. See Warren Buffett, what did he do when he was young? When he has only $105,000, $100,000, he went and he bought a house, a 5-bedroom house with I think $31,000 or $35,000. I think $31,000, and he still lives in this house until now. This guy he doesn't spend that much, and he knows that a home, you should, the first thing when you are investing, okay, you should think about the home. Okay, if you have the money to buy it with your home, it's excellent, because at least you don't pay rent, or you don't pay a mortgage all your life, and this is interest rate, and it will make a lot of trouble to you. Okay, so never late to begin. It means whenever you find yourself, you want to begin, you just make a plan, get some education, and just you begin right away. Okay, and number 10. Number 10 is, all the people know this, is buy and hold. Now let's explain this buy and hold. buy and hold if the company that you are investing in is a good company through the years. Okay? So, but you buy and you hold a company, then 1 year, 2 years, you see that your investment is not going that good, or the stock is going down and you are losing money. Okay? It's high time to change it. Okay? So that's why you should always diversify. You don't put all your money in one company. Let's say you put it in a bank. You buy a stock that it is a bank. Okay? That's good. Now, you see that your stock is going down, and you are losing all your money. 10%, 20%, 30%. Okay? In the future, you will be not doing an investment. It will be a failure. That's why, see what Warren Buffett has done with his Berkshire Hathaway, which is at first was a textile company. There are mills, many mills, that produces textile. But 10 years, 20 years, Warren Buffett, he sees that his investment is not doing that good and this industry is dying. So what does he do? Does he stay with this bad industry all his life? No. He sold all his investment in this company, although the name stays, Berkshire Hathaway, but he sold all his mills, he gets rid of this textile company, and he buys Geico. From Geico, Coca-Cola and the other, and then he began to see a great growth in his portfolio. Okay, so you should take decisions. If you own something for 5 years, 10 years, and you see that it is going down and you are losing money, it's time to sell and buy another investment. Maybe the other investments are doing better. And this is life. It means it's not, when we say buy and hold, it doesn't mean you hold a loser for all your life because they told you buy and hold. Buy and hold, it is just that your investment should be for a long time. Okay? It doesn't mean that you should hold for a company, a loser, and you stay with it until it go bankrupt. And understand that go online and see the bankrupt companies in, let's say, 2017. You will find hundreds of companies in the USA here, they go bankrupt. What does it mean they go bankrupt? It means they lose business. They can't sustain in business because they are losing money and they are not making money. Even if it is a big company, some big companies, some well-known companies, and they go down until they go bankrupt. So don't think that a company was all the companies that you know are good. No, there are some companies that they lose business. For me, the best thing to see a company is doing bad is the price. And you can compare it to its industry, because when you see a company, you see the sector, you see the industry. Go to the industry index. If your company is doing against what the industry is doing, it means that the company is doing bad. For example, the industry is going good, and you see the chart is doing good, and your company is going bad. It's going down for many months, 1 year, 1 month, 2 months, 6 months, 1 year, 2, and you see that it is losing money, and your account will shrink. So it is high way to go and see each quarter what is going on to this company. You will find information right away. Just go to any website and it will give you information about earnings. If the earnings are going down, you understand that they are doing a bad business. If they have a lot of debt, it means that this company will be having a lot of trouble. Okay, so I spoke about 10 recommendations, 10 points. Please share with me. If you have more points to add, please add in your comment section, and I will comment back after you. Please try to share my videos and try to subscribe if you haven't already. And thank you very much, and see you next time.